Take our lead, let's help you make your mark. Our goal is your satisfaction. Let us show you the way.
Hedge funds also increase risk. Their use of leverage allows them to control more securities than if they were simply buying long. They used sophisticated. That created higher returns in a good market and greater losses in a bad one.
Make your mark, take our lead.
The reason they make large sums of money has largely to do with the business structure of a hedge fund. Simply put, you raise money from investors and invest it on their behalf. The expectation is that you'll make them a healthy profit, and then as your fees you'll take a percentage of your generated profits, 20%.
Take our lead.
This general strategy of hedge funds, so defined, is clearly not dying out. Plenty of successful investment vehicles use hedging, arbitrage and leverage. The name, hedge fund, may not go away, but it seems increasingly likely that the 1980s and 1990s style hedge fund management needs to adapt in order to survive.
Let's help you make your mark.
Hedge fund general partners and managers often create high minimum investment requirements. It is not uncommon for a hedge fund to require at least $100,000 or even as much as $1 million to participate. Unlike mutual funds, hedge funds avoid many of the regulations and requirements within the Securities Act of 1933.
Make your mark, take our lead.
Technically speaking, Berkshire Hathaway is not a hedge fund, it is a holding company. Although Berkshire operates similarly to a hedge fund in terms of investing in stocks and other securities, it does not take performance fees based on the positive returns generated every year.
Take our lead.
The bottom line, we think hedge funds will be around in 10 years, but in a more consolidated industry with easier access to smaller investors and lower fees. Despite the industry lagging over the past decade, this can easily turn around again and produce above average results as they did in the 1990s and early 2000s.
Let's help you make your mark.
Tiger Global ended 2019 managing roughly $40 billion in assets. The richest hedge fund manager on the list is Jim Simons, a former math professor and the founder of quantitative trading firm Renaissance Technologies.
Thank you for watching. Please subscribe and hit the bell notification.